All right, the TCS Q2 numbers are with us, and it is 6450 crores. That's the most important number, and that's looking
better than what we expected, Lata, because 6450 was the Bloomberg estimate. If you really look at it, our number was a tad bit on the conservative side. So the PAT growth should have come in upwards of 6-7% is what my estimate is. So that should go down well with the street. 6450, as far as the profit figure is concerned, of course, we'll wait by and get the revenue numbers.
6% now higher than the quarter ago number. So that's important. Consolidated profit coming in at 6450 crore. And now, of course, it's the revenue and the dollar numbers that we will be waiting for.
So, Lata, I've just opened the release and I'm trying to go to the key important numbers that we all are waiting for. So, yes, I have it now. So, the revenue has come in at 30541 crores. So, a shade better than what we expected. In fact, just broadly in line.
I think now everything is there. Operating margin has coming in at 25.1.
Yes, and that should go down.
Volume is 3.2. So, 25.1 I think will go down very well with the street. Go ahead, Anisha.
Well, yes, the operating margin really is showing a very good picture. 25.1% expansion of 170 basis points. Yes, there was already an expectation that it would expand by around 80 basis points. That has expanded by 170 basis points. If you look at the earnings per share as well, that has gone up by 11%. That was already expected because of the buyback. The revenue figure bang in line with the expectation. And you talked about the volume number coming at around 3.5%. Well, that again is what something the street was working with. 2.5-3% was the volume growth expected. And even if you look at the revenue number, that has come 3.2% higher, almost in line with expectation, a shade better. So if you look at the key headline numbers that we have as of now, they look all good. So we have a revenue growth of 3.2% better than our expectations. We have an EBIT number coming at 25.1%. That is definitely much better than what we expected. And the profit figure has also come in better than what we expected. The digital revenue as well has gone up to 19.7%. Last quarter it was around 18%. That is one more thing that the street was watching out for.
I think we don't yet have the dollar revenue number. That is the only one I'm waiting for. Otherwise, I think we've got all the numbers, and just at the moment, everything is above expectation.
And
the profit has come in. Yeah, please.
No, I was just going on to read the management commentary. We experienced robust volume growth in Q2, driven by good demand across multiple industry verticals. Strong, broad-based client metrics this quarter demonstrates our increasing success with newer customers. Large deal wins this quarter is what the management says is what really added a good pipeline, as well as a bottoming out of the retail sector softness positions as well.
I think we also have attrition numbers. That's further down by 0.3%. So it's come down from 11.6 to 11.3%. It looks like an all-round good set of numbers, something that should warm the street. But let's get the first comments from the street. Ravi Menon, the lead IT analyst from Elara Capital, has joined us on the phone line. Ravi, I'll just reiterate the numbers if you are not sitting in front of your BSC screen. The revenue is up 3.2% at 30,541 crore. The rupee revenue poll, what our poll threw up was only 2.6% higher. So this is significantly higher at 3.2%. Profit growth has come in at 6450 crores. That would be up about 8% if I'm not mistaken. I'll come back to you. And the EBIT margin has come in at 25.1 against our poll of 24.5 against quarter ago 23.4. Ravi?
Hello? Yeah, sorry. With that, I think good set of numbers overall. The rupee revenue is slightly lower than what we had expected, but the PAT is a very significant beat. I didn't catch the dollar figure. Is that out yet?
We're also awaiting the dollar revenue figure.
But I would like to tell you the BFSI growth that has come in. I'm just looking at the segment result. That is showing a growth of around 3.7%. And the commentary on the industry says that with the exception of retail and CMI, all industry verticals grew above the company average, led by travel and hospitality, which is up around 8%. Last quarter as well, that did well. Energy and utilities again coming into picture, up around 7%. Life sciences and healthcare up around 3.6%. And they say on a year-to-year basis, all industry verticals, with the exception of BFSI and retail, grew above 9.5%. So other than BFSI, which grew by around 3.7%, all the other segments seem to have done well. What's your sense on that, Ravi?
Okay, Ravi, actually we don't have the dollar revenue number. We have everything else. The rupee revenue growth has come in at 3.2. Profit has come in, if I'm not mistaken, at 8%, but it's 6,450 crores. EBIT margin 25.1, and most importantly, the digital revenue has grown by 5.9% quarter on quarter, and now the digital revenue is at 19.7%. So almost 20% coming from digital revenues. Ravi, any further additions?
I think these are excellent numbers. So, BFSI, we had been seeing some delays in decision making, but hopefully after the big deal that we've seen come out from Lloyd's for IBM and another big deal from Lloyd's for TCS, we should hope to see some more traction building up in BFSI. And as far as digital, I mean, with the strong growth, I think people are finally starting to embark on more large-scale digital projects. So, we think that next year should definitely be a better year for the industry, judging from what we've seen so far, and conversation with the industry analysts.
Ravi,
that seems to be.
Ravi, I'm sorry to interrupt you, but I think the number that you much wanted is with us. Dollar revenue has come in at $4,739 million. That is $4.739 billion. That would work out to just about 3%, maybe a shade above 3%. Compared to the quarter ago number of $4,591 million. While you do the math, let me invite Karan Taurani of Dolat Capital to join us. Karan, you have had a little more time to look at the numbers calmly. Is it all ends up a beat on estimates?
Yeah, the numbers are a beat on the dollar revenue front.
No, but the margin as well. Margin has come at 25.1. I thought that was also a beat.
Yeah, so margins have done well. But if you realize the last quarter, the margin had a massive hit in terms of decline. And if you put in this quarter margin of 25% I think the company's guided range for the aspirational guided range is about 26 to 28%. So if you take the H1 margin, I think they are still below the guided range. And given Q3 and Q4 where the growth is lower because Q1, Q2 are seasonal in nature and you get good margin kickers over there, I feel the margin guidance may be revised downwards despite a good performance in Q2.
So you expect the margin guidance to be revised, but what in terms of your
To be revised lower, you said?
Pardon me?
You expect the margin guidance to be revised lower?
Yes, absolutely. There may be a scope of, getting it revised onwards to about 50 to 70 pips depending on the scenario, because H2s, there are limited margin levers which are available.
And what about your own estimates for the company? Do you think you'll have to change them? Post these numbers, a slight bit better than what we expected?
Yeah, it is a beat. So it is about 5 to 6% beat on the EBIT level for as per our estimate. So there may be a revision to the extent of 3 to 4% on that tune, but nothing major in terms of a surprise or a game changer. But yeah, digital revenue is a beater. So digital revenue growth of Q1Q is extremely excellent, and they are closing towards 20% of revenues coming from digital. So more growth in digital and higher contribution going ahead, that will obviously add for the benefit of TCS.
Okay. Well, do stay on, Karan. Would want to invite your attention to the management comment as well. And I'll just read that comment before I get more experts. Gopinathan's comment: we continue to gain share in the fast-growing digital spend of our customers. That's that almost 20% that digital revenues account for. He goes on to say we continue to gain share in the fast-growing digital spend of our customers, evident in our industry-leading digital growth in Q2. By sharpening our focus on individual components of the digital service stack, we've been able to bring to bear the full power of our contextual knowledge, research, innovation and investments in location-independent, agile automation and cloud on our customers' transformational imperatives, and become a trusted partner. The Chief Operating Officer, Ganapathy Subramaniam: it has been a very satisfying performance this quarter, striking a good balance between pursuing revenue growth, particularly in digital opportunities, while tightening our execution to deliver greater efficiency. Our client centricity and business depth are resulting in industry-leading customer satisfaction levels and strong client metrics. With the sectoral headwinds slowly abating, we expect steadier and stronger growth ahead. That is the only guidance we have got. Gopinathan, no guidance at all. The only sentence or phrase that we have in terms of our guidance is: with sectoral headwinds slowly abating, we expect steadier and stronger growth ahead.
And Lata, I would also want to point out what they say about the North America and the geographical breakup. They say North America grew by 1.4% quarter on quarter with continued softness in banking and retail. So that sector is not showing any respite as far as that is concerned. Europe has grown by around 5.3% quarter on quarter. Latin America, which was doing well last quarter as well, is showing a growth of around 5.7%. APAC as well, up around 3%. UK, I think, is a tad bit slower. Actually, it's a bit faster than what it did last time. It has grown by around 2.5%. So I think North America continues to be a pain point, 1.4% growth. But let's get across to our analysts and understand what they make of it. Sarabjit, if you can hear me, what do you make of this BFSI growth of around 3% and the North American growth of around 1.4%?
See, we are not very surprised because more or less it was expected. BFSI and retail has been a couple of domains which haven't been up to expectation for TCS, and also apart from digital, which has been a kind of steady climber or contributor, I think. It's a known trend which has played during this quarter. The positive, I think, is during this quarter what they have released is, I think, margin expansion more than anything else, and I think it's healthy given it's come in at the volume growth of Q-on-Q growth of 3.5, which I think is healthy in the current circumstances when their key domain like BFSI is not doing that great as expected, and it's likely as the commentary goes, probably they're expecting some traction going forward, and also the deals indicate. So I guess decent quarter, decent volume business traction happening, and the commentary
is it decent enough, Sarabjit, for you to up your price estimate?
Lata, the thing is that currently as has been pointed out, the margin guidance of the company has been around EBIT margin of around 26 to 28 band. Right. Whereas first half has not delivered to that extent. So probably that's the only area I will watch before I make a comment on that. But I think the street has already, already factored in the same that it's unlikely to be achieved. So I don't think that should be detrimental in downgrading, but yeah, upgrading will take more confidence from management, and probably I think max to max upgrades might happen to the next year numbers rather than, full year numbers getting anything upgraded so fast. But yeah, a little bit of upgrade will happen because numbers have been slightly better than our expectations. So those minor upgrades will definitely happen.
Ravi, do you think there is enough spunk in the numbers for the markets to react positively tomorrow? Or would you just wait for the management commentary?
I think that the revenue growth is actually not up to what we had expected. We were looking at 3.9% in dollar revenue growth because of considerable cross-currency tailwinds. So I think that I'd like to see what the constant currency growth is. If that's about 3%, that's comfortable. Significantly below that, I mean, then I wouldn't call these results very good. Then I think the revenue growth is really critical. And depends on how much of the large deals that in Diligenta that have come into the revenue. So once we get a picture of that as well, then we'll know whether next quarter we should expect a significant improvement in revenue traction.
Okay, I'm not still able to get the constant currency number for you, Ravi. Final question to you, Karan. Have you upped your price target, left it unchanged? Where is it now?
So we have a sell recommendation on TCS. Our target price is close to about 22.50. Based on these numbers, I don't think there'll be any major change in our estimates. So we will continue to have our sell recommendation. And just in terms of the stock price performance, I don't think it would react any major positive because numbers are just a minor beat on the margin front, which may not be sustainable in nature. And plus, the guided band which they have, it is still the management do comment that they want to achieve the guided band, but they may not achieve that band at the end of 518. So that remains to be a concern as of now.
Okay, very quickly, Sarabjit, what would you watch out from the management?
Primarily, since they have said that they look out for that, probably they're seeing some traction and upward movement in BFSI. What is the degree and what is the momentum that they're seeing? And secondly, definitely margin, because since till last quarter also they were maintained their guidance. So probably I think these are the two main things. Rest, I think whatever they delivered is pretty healthy in the current circumstances.
Fair enough. Sarabjit, Karan and Ravi, thank you very much for giving us your first take on the TCS numbers. Last word from Anisha.
Well, yes, numbers look fairly in line, in fact better than expectations, at least on all parameters as far as I can see. And the biggest positive is of course the EBITDA margin number, because that has come in at 25.1%, a growth of 170 basis points. Yes, there were currency tailwinds, but this is better than what any analyst on the street was expecting. The revenue growth has been strong both in terms of dollar terms as well as the rupee terms. Constant currency growth is what we are waiting for, but if you look at the PAT figure as well, 6% higher on that one, so that one goes down well as well. In terms of the segments, yes, BFSI 3.7%. I don't think that should be taken negatively by the street. They were expecting a 3% growth. This is better than that. North America bit subdued at around 1.4%, but that again was what was expected. So clearly, the numbers coming on expected line, nothing that is a bit of disappointment. If at all, there is only a bit of appreciation that is coming up in terms of numbers.
To be fair, the stock has risen about 100 rupees in the last 4 or 5 days. So let's wait and see what the management has to say. That's a wrap on this edition of